Good afternoon and welcome to the Media Financial Management Association's Town Hall webinar on AI, Accounting, and Finance Transformation. We would also like to extend a warm welcome to the AFWA members joining us today. My name is Amy Burton and I will be the moderator for this webinar. Before we begin, please be sure you're muted to help cut down on distractions during today's presentation. Please note, in order to earn CPE credit, you must be the one who has registered in Zoom, stayed for the duration of the webinar, participated in the polling questions, of which there will be 3, and completed the CPE evaluation survey. You will receive an email tomorrow with the link to view the recording along with a copy of the slide deck. Our presenter will be taking questions after the presentation. You may submit written questions in the chat box at any time, and they will be read off once the Q&A portion begins. You will also have an opportunity at the end in order to unmute to ask your questions verbally if you would prefer. Our presenter today is Andy Jones, Vice President, Head of Global Finance and Accounting with RGP. Thank you all again for being with us here today, and I'll now pass it over to Andy.
Thanks, Amy. Welcome all. Again, I'm Andy Jones, and I'm going to walk you first through our agenda today, and then we'll dive right in. I'll set the stage first in the beginning of the talk to talk a little bit about trends. I know people want to jump right in and talk about technology, but I think it's a little premature to talk about the technology before we talk about why we have such pressure to start to use advanced technologies like AI. We will then talk a little bit about how we need to change our mindset to get ready to use these tools, and then ultimately we'll talk about the technologies themselves, ones that have emerged in the last few years and ones that are front and center today. And then toward the end, I'll share a glimpse of some exciting capabilities that I think are right around the corner in the not too distant future. And as Amy mentioned, we'll close with a few minutes of Q&A at the end. So as I introduce myself, first I need to introduce my firm. I'm with RGP. I'm part of their consulting arm, and I have the pleasure of leading our global finance and accounting consulting practice. We help clients optimize the effectiveness and efficiency of their finance and accounting function through process reengineering and technology enablement, including target operating model design, shared services deployment, technology injection, and all sorts of other services that enable your transformation efforts. At RGP, we start with what really matters, people. Our approach is built around helping your team engage and operate effectively and efficiently to outperform your competition with confidence. This ensures that our solutions address a problem. They're not just about the latest technology or trend. And I think that's really what powers real lasting transformation. We positioned our solutions for total business impact, making sure your people, your processes, and your technology work in unison. We work across most operational parts of the organization, from HR to talent, supply chain, project management, of course, finance and accounting, procurement, supplier management, IT, customer and employee experience, data, and change. One last little bit, and as well as my contact information. We do have decades of experience. We have global talent, and we want to essentially create a culture of value and inclusion, not only for our employees, but across our client organizations, however we can. That's evidenced by 100% of our C-suite are either women or minorities. 69% now of our overall team is racially or ethnically diverse or women. We've been recognized in a number of business publications, including U.S. News, Forbes, and the like. We have over 1,700 global clients, including 88% of the Fortune Global 100 and about 70% of the Fortune 500. We've completed, as you can see, about 340,000 projects, more than that now, across 37 different countries around the world, and have about 2,600 employees worldwide. So enough about us and enough about me. Let's move into a polling question to start things off. This will give me an idea to understand you a little bit as we start to dive into the content. So the first polling question is, considering the issues that you see listed below, which is the biggest challenge your organization is facing. And as Amy mentioned, please remember you need to answer the polling questions in order to get your CPE credit.
We will give everyone just a few more seconds to answer the question. And we will close the poll here in just a couple more seconds. I see just a few more people popping in here. All right, I'm going to go ahead and close the polling question. And here are the results.
Okay, so lots of folks dealing with process complexity and enabling technologies. Actually, if you look at it, it's virtually split across the board. You're also having difficulty in attracting and retaining personnel. So I think that's a good mix. One, it's pretty representative of what we're seeing in other areas, among our clients. And second, it kind of sets the stage for this discussion that we're going to have, because we really are going to talk about process technology and, of course, people. So as I mentioned, before I dive right into the discussion about AI and technology, I want to talk about a few trends that we're seeing and how those trends are influencing the direction that organizations are taking. CFOs today are faced with continued pressure to improve productivity of their operations. When I stepped into this role 6 years ago, headcount containment was a huge factor for virtually every CFO I talked with. Most were looking to reduce headcount. Many were planning major cuts at that time. And I think what's interesting is that seems to be changing quite a bit. While I do think that there's still an emphasis on productivity, driving down the cost of delivering services is certainly a priority. But with some of the demographic changes that we're going to talk about in a moment, it's really changed the dynamic, and the emphasis on headcount reduction has really lessened. What I'm hearing a lot more from CFOs and those in the CFO suite and the entire CFO umbrella are that stakeholders across the organization are looking to the office of the CFO for insights that blend not only financial data, but operational data and third-party data. And interestingly, more and more CFOs are being asked to take charge of digital transformation efforts. And that's not just within finance transformation, that's across the entire enterprise. Some of our data, which is probably a year old now, so the number may have even increased further, but more than 2/3 of CFOs are now responsible for their enterprise-wide digital transformation efforts. That's pretty important as we start to talk about automation and AI as key enablers and technologies therein. The good news is the CFO is part of the conversation. Our research also shows that organizations still struggle with large-scale projects, especially transformation projects. And interestingly, the more strategic a project is, the more likely it is to fail to meet expectations. We found that having deep subject matter expertise and experience is critical on these transformation efforts. Now, that may seem like a no-brainer. You got to have experience and you've got to have expertise to help shepherd through these projects. But the point I want to make here is you might not always have the expertise inside your organization. Sometimes it's going to come from outside. And, you're going to be able to tap third parties who can bring expertise, whether they're external consultancies or gig workers or what have you, to bring the experience that you're looking for to mitigate the risk of failure in these large transformational projects. Now, I'm going to add that third bullet there is an aside from me, and I'll point out that this wasn't part of RGP's formal research, but I've noticed that projects that involved F&A that were driven by IT versus those that were led by the business stakeholders are more likely to result in unmet expectations. The folks in the CFO umbrella need to be involved in those IT decisions that impact them, the folks in the CFO office, if the project's really going to succeed and they're going to get adoption throughout. These issues that I've mentioned here aren't really unique to finance and accounting, but I bring them up because they're vitally important as you prepare for any kind of process standardization, centralization, outsourcing, and certainly technology enablement as we move forward. So a moment ago, I mentioned that there's been a shift in attitude toward headcount reduction within organizations' finance and accounting functions. Mind you, that CFOs still want to see those productivity increases. They still want to reduce the cost of delivering F&A services back to the organization. But the demographic changes that we're seeing in the US and abroad have put a new spin on things. As you can see from some of the data on the screen here, um, fewer people are graduating with degrees in accounting. And that's been a trend that really started all the way back in the 2015, 2016 time period. It's been about a 3% drop year over year in the number of people obtaining bachelor's degrees in accounting. And the trend was about an 8% decline in master's degrees. Now, I happened to see over the weekend an article that said that there's been a slight uptick in those obtaining masters in accounting um, year over year over this past year. So I hope that that trend continues, but I have a feeling that we're going to have to figure out new ways of working. There's still fewer people taking the sitting for the CPA exam, for example. I think that's number peaked back in 2016. Not only that, but we've seen a mass exodus of people leaving the field of accounting and finance altogether. More than 300,000 people left the accounting field in the 2021 and 2022 timeframe alone. A lot of that was brought on by the pandemic, which caused people to kind of reevaluate their work and the like. But it also has to do with some macro issues that we're seeing as well. The average age of CPAs is more than 52 years old, about 52 and a half years old. Baby boomers are retiring at record rates. Gen Xers like me are also beginning to retire. So we're going to have fewer people coming into the profession at the same time that we have a lot of people leaving the profession, which sets up a real problem. And finance leaders today, as a result, have to talk more about retention and acquisition of good talent than they ever had to before. Of course, another way that we overcome these problems is to change our operating models, centralize, standardize process, and of course, use the technologies that we'll talk about as part of this overall presentation. I think one thing that I think we all have to think about as finance leaders, if we're as leaders, we have to start thinking differently and acting differently in order to succeed, given these trends that we're seeing out there and what's going on within the marketplace. So I really want to challenge everybody out there to change the way you think and the way you approach business in order to tackle some of what's going on. And what do I mean by that? What do I mean by a new workforce coming in? I've seen some recent notes that say the great resignation is over. It's time to get back to work. We're seeing a lot of that within our client base, seeing a lot of return to office policies coming back in. Return to office policies seem to have disproportionately impacted F&A professionals, which has been pretty fascinating given the market dynamics I talked about a few minutes ago. I want to share some other statistics that I think set this up. Nearly 86% of millennials say that having a sense of purpose at work is very or somewhat important to their overall job satisfaction and well-being. So they want purpose-driven work. 44% have said they've turned down an employer based upon their personal ethics or beliefs, and 50% have said that they've rejected an assignment for just a project for similar reasons. About 2/3 of millennials work for organizations that have recently implemented return to office policies. And again, these policies are yielding somewhat mixed results, with many millennials and later generations preferring hybrid work models. One thing that I think comes back to that first point I made, and that's purpose-driven and the ability to influence change. About 40 or 58% of millennials believe that they have the power to drive change within their organization, and that's meaningful to them. And I think we have to keep making people feel more empowered to bring about change if we're going to retain the people that we have. A few things that I think we're going to be looking for out of personnel going forward, and I'll touch upon this a little bit later in the talk for sure. Technological proficiency In addition to having familiarity with, say, accounting software and Excel, we're going to be seeking hires that have experience with emerging technologies such as advanced analytics and, of course, AI. We're going to want people with problem solving and critical thinking skills. They may not be your traditional, accounting majors. We're also going to be looking for people with the ability to analyze and interpret financial data and make informed decisions, blending not only that financial data but as I mentioned, operational data and other macroeconomic data to boot. Before I move into some of what's going on within media and entertainment, let's jump on polling question number 2. That question is, where are you focusing your attention and your investments these days? And I gave you 3 choices to pick from.
So polling question number 2 should now be up on your screen. We'll leave that up here for about 30 seconds while everybody answers it. The answer options are taking labor costs out of our F&A operations, improving our performance, driving effectiveness metrics, or investing for the future by introducing new technologies or ways of working. And we'll give everyone just a few more seconds to answer this question before I share the results. Okay, I'm going to go ahead and close the poll. And here are the results.
Well, as I thought that taking labor cost out would come in last. And again, I predicted if I had given the same talk 6 years ago, these numbers would have been flipped. So I'm thrilled to see that. I do think that a lot of time and attention is going to be spent on retention, improving operational performance and effectiveness. I think, driving those insights is really great. And half of you said you're investing in the future by introducing new technologies or ways of working. I'm thrilled about that. So let's set the stage by talking a little bit about today's media and entertainment industry. We'll talk about not only the industry as a whole, but then some of the things that we're seeing within. The numbers that we see in media and entertainment tell a pretty interesting story. It's about a $3 trillion market globally. I think I saw $2.9 trillion, and that represents the industry. It's growing at about a 7% clip, almost 6.7% compound annual adjusted growth. And a statistic that I used in my April talk from that I gave for MFM on operating models. Recent research shows that about 68%, so more than 2/3 of media companies, are planning to increase their outsourcing initiatives. So this isn't just about cost reduction. This is certainly, cost is certainly important there, but it's also about creating scalable, efficient operations that can adjust to changes in the industry, in the accounting industry, in the media and entertainment industry, and the like. And I just want us to think about the amount of change going on. And many of y'all have seen the headlines over the last couple of days, more change is coming. Ask yourself these questions. How many different new revenue streams have you added in the last, say, 3 or 4 years? How many new entities have you created or acquired? And how has your compliance burden changed over time? All these things come into play as we talk about complexity and how we're going to leverage technology to make our lives better and more efficient. Media and entertainment industry is at a fascinating inflection point. We're seeing unprecedented growth. We look at the complexity. I talked about that a moment ago. We're operating in an environment of multi-entity operations that span different countries around the world's different currencies, and of course, different regulatory frameworks. Many of you are managing dozens, if not hundreds, of legal entities, each requiring their own financial reporting and compliance oversight. The regulatory requirements are going to continue to multiply, I think, although, in certain areas we're seeing a little bit of a pullback in regulation, but I don't know that we're going to see full contraction. Revenue recognition rules for digital content, international tax compliance, reporting requirements, and the like are all becoming more intricate each year. Your teams are probably spending more time, a significant portion of time, in fact, just staying current with all the changes, let alone mastering how to implement those changes. And then obviously digital transformation is, no longer optional. the shift to streaming services, digital content delivery, subscription-based models, and the like have fundamentally changed how we track and report revenue. There are tiered pricing models, there are bundling of services, all of which are adding to the complexity of what's going on with things like royalty payments, content licensing agreements, international rights management. Old school accounting systems and processes really weren't designed for a lot of these business models. And then with industry consolidation on top of that, something many of you have probably experienced firsthand, it's creating operational redundancies that need to get addressed. And so when companies merge, we often find ourselves with multiple finance teams with different processes and different systems that are set out to accomplish essentially the same tasks. And we have to figure out, well, what's the best approach in the merged environment. Here are some sobering statistics that are applicable here for in media and entertainment. About 60% of F&A personnel's time in this industry is still spent on transactional activities. That's disappointing. We've got to drive that number down if we're going to be successful. The average media and entertainment firm takes 8 to 10 days to perform the month-end close. Now, there are some top performers that are doing that in half the time, 4 or 5 days, but 8 to 10 days, is just too long spent probably doing transactional work and not enough time spent in looking at what's driving changes within the business, providing those business insights back to the various stakeholders within the organization. And here's another one. Only 15% of personnel feel as though they have the tools and processes in place to help them provide meaningful insights. That's really disappointing. So we're about 20 minutes in, and I bet you a bunch of you are saying, okay, so where does AI fit into all this? And I get it. And we're going to start to shift gears and talk a little bit about technology at this point. Hopefully, I've set the stage for what's to come. We can agree, I think, that organizations are under a lot of pressure to perform. They have fewer people to do the work. They're going to need process reengineering and technology to meet these demands. So we're going to talk a little bit about some of the technologies. I'm sure a lot of you have heard about RPA. I am going to spend a little bit of time talking about it. RPA has been around for more than 20 years, but not everyone's using it yet. And I don't know why. Some firms just pick poor use cases, I think, to start their automation journey and took a kind of a negative view of what the potential of RPA and other forms of process automation could do. Other companies tried to automate bad processes and ended up with automations that were broken more often than they're not. So, those two factors alone, that kind of gave RPA a bad name. That said, nearly every Fortune 500 company has implemented some form of RPA in their organization, and a lot of it in F&A. But it may not be, true end-to-end process automation. It could be very task level, which isn't a bad thing. You have a automation that's helping you, knock out certain repetitive, simple tasks. But really, what I want to start talking to you more and more about is how we start to automate end-to-end process and how technologies like artificial intelligence are going to enable that. Here's a slide I like to use. It's a little bit of an eye chart for a webinar, and I apologize for that. You'll get the deck as part of the deliverable of this, so you don't have to necessarily zoom in on every single word on the eye chart here. But I give this to folks to help them think through what different types of artificial intelligence and machine learning are out there, and how these different flavors of AI, if you will, can assist us with our work. Too often I think people, when they hear AI, they think about chatbots. They chatbots like ChatGPT and the like. And I love ChatGPT, don't get me wrong, but that's not the end game here, folks. I do think that there's a place for it. And I was talking to an exec the other day about a really interesting way that they were using ChatGPT to accelerate top line growth in a new business line of theirs. But again, chatbots isn't, the end of it. You can see anything from intelligent automation to simulation capability that could come into play for helping you simulate and model financial, different financial outcomes, financial risks, and the like. Chatbots are a form of interaction. Again, prediction is another feature that you might look for from these technologies, whether that's predicting an outcome, predicting risks, helping you assess risks, helping you understand the potential lifetime value of different clients. You can use AI for vision, in starting to understand documents and other complex visual items, whether they're physical assets like inventory or whether they're complex patterns that we as humans might not recognize if we're looking at given graphs. And then obviously interpretation and creation of things like, and we're seeing this already embedded in a lot of technologies, automated variance analysis, for example, MD&A reporting, other ways of taking a given data set and then interpreting the results and translating that through natural language into things that we as humans can talk about. So let's talk a little bit about intelligent automation. I'm going to talk again about RPA, and there's a real reason why I want to talk about RPA here. A common use case for RPA is accounts payable. Recent survey said that over 60% of firms were using RPA in some way, shape, or form in their AP process, and that about 13% had said that they had actually optimized their AP process by the use of RPA. They're getting demonstrated ROI in reducing cost, in reducing headcount in some of these more transactional areas. Some pundits have been pontificating about the death of RPA. Like I said, some organizations had a bad start, but to me, RPA continues to deliver efficiency gains for routine rules-based tasks. Leading media and entertainment companies have implemented bots for invoice processing, for doing things like royalty calculations and intercompany calculations. So again, you may be asking yourself, well, when's he going to talk about artificial intelligence? These are bots, but they're not AI. And I agree with you that I don't want to confuse matters any further. I don't necessarily consider RPA to be AI, but it's a great on-ramp to AI. Why is that? Because a lot of the platforms themselves are starting to provide bolt-ons and new capability that help you integrate AI into processes you already have, so that you can create intelligent automation solutions that can not only identify exceptions, but actually handle those exceptions and make judgment-based decisions that aren't necessarily rules-based. I think it's one of the, for those of your organizations that are already using RPA today, it may be the first way that you actually get to use AI in some kind of meaningful way in your organization, as part of your core process. I'm really excited about the ease by which some of these leading RPA platforms like UiPath, like Automation Anywhere, are providing a safe and reasonably easy on-ramp to adopting these. And not only AI, but machine learning and also agentic AI, which we'll talk a little bit about as we go on. So let's break down end-to-end AP processing, for example, and let's start to talk about what the next generation of document processing looks like. And I think I saw a question up in the chat that maybe this will address. OCR has been around for years, but if we break down the elements of, say, AP processing into its fundamental areas, and I did a back of the envelope sketch here, as you can see on the slide, to break down the elements of AP processing that I think into its fundamental components, to show what the end-to-end looks like and to show what different kinds of AI that you might be able to use to enhance each of these subcomponents so that you get a better chance of getting higher throughput. If you look about this, a lot of the elements that I showed in that slide a couple of things ago about vision are coming to be. Things like image improvement. The better image you have on an inbound invoice, for example, the better quality that you have, if you can remove some of the noise, if you can de-skew some of the things that may have been a scan, you're going to improve your data capture rates, which improves your touchless rates. Again, we're now seeing specialized engines that enable these AI agents to identify various chunks of information so that we can process them differently. A paragraph is different than a table. It's different than a graph. It's different than a narrative that contains a lot of numbers, and we can break these apart into their components and then essentially hand them off to AI agents that specialize in that. And again, I'm not going to go through this whole eye chart either, but you can see the different elements of where AI technology comes into play in this relatively straightforward process of taking an inbound invoice, extracting the relevant data, matching it up against your, say, ERP or system or POs or what have you, having humans in the loop or a reviewer, could be a digital reviewer in the loop to look for pardon me, accuracy and consistency, and then ultimately populating your downstream systems like your payment systems and the like. So another way I think you're going to get to use AI really soon, if you're not already, is something that I'll call embedded AI. Modern ERP solutions are evolving to address a number of media-specific requirements. We're also seeing purpose-built platforms and models to address industry-specific requirements, such as complex royalty calculations, rights management, multidimensional revenue recognition, and the like. Some of these systems now offer native integration with content management platforms, providing a foundation for a somewhat unified data ecosystem that quite frankly, a couple of years ago was previously impossible. Oracle has added some really exciting AI capabilities within its Fusion Cloud application suite, including like 50 new AI agents. And that number may be even outdated. I pulled it 2 months ago, so it's probably 70 by now, capable of authoring, providing advice, taking recommended actions. SAP is doing the same thing. They've embedded AI throughout its cloud ERP solutions. Their 2025 Outlook highlights 5 key themes: AI agents, specialized AI models, enterprise adoption patterns, user interface innovations, and regulatory adherence, all things that are important to us, of course. And even platforms like Sage are getting in the game. Sage's Copilot includes a close assistant with an AI-powered search. And it also has things like variance analysis for real-time insights into fluctuation. Using AI Copilot functionality in S/4HANA, users can perform natural language queries against their data and kick off autonomous or semi-autonomous tasks just using natural language. And I think that's where we're going to start to see more and more of this embedded AI. It's starting to show itself in the Microsoft Office suite as well. For financial close optimization solutions, we're seeing things like platforms like Blackline that are revolutionizing reconciliation and close. They're helping automate matching process, providing real-time visibility into close status, centralized documentation that's relevant for the close. And while people have adopted these past rules-based technologies to, say, cut their financial close cycle in half while improving accuracy and control, Blackline is now adding agents such as summarization agents, conversational query agents, and insight agents into their platform to help you glean insights from the data that's already there. They've also included things like risk detection and in their journal risk analyzer. I've looked ahead at their upcoming IT roadmap. I'm not allowed to talk too much about it, but it's got some great stuff on it, and I'm really excited to see what there is to come, and I think you will be as well. FP&A certainly experiencing perhaps the most dramatic evolution over the last 5 years. Traditional budgeting and forecasting processes are being replaced by continuous planning models supported by advanced analytics. Tools like Anaplan, Workday Adaptive Planning, and Planful are enabling driver-based planning and scenario modeling. These are capabilities that are designed really to help you understanding things like subscriber growth projections, investment, inform you on making investment decisions and the like. Um, Many of these organizations are now putting out quarterly updates that are injecting AI into them. So keep your eye out on your cloud-based platforms for embedded AI, and look to see how that could bring something to you. Let's talk about the degree of embedded AI versus bring your own AI, and we're going to talk about some of the challenges in a moment. Gartner predicts by next year, 2026, 80% of software vendors will embed AI into their applications in general. That's a statistic that's only a few months old now, and I think that they're on target with that. Uh, AI features will come in the form of upgrades, like I said, add-ons to existing applications, and they'll be embedded in the suites that we already have in place today. Individual IT departments want specialized AI for certain things. We as business users are going to have specialized needs. So unlike embedded AI, we're going to have things where we're bringing our own AI, or we're blending them with other platforms that are out there. Bring your own AI solutions, aren't necessarily a problem, but they take a very diligent effort to bring to light and to bear. And many of them are today focused on top line growth as opposed to back office, efficiency gains. But I think that trend will shift over time. And so that we'll see more bring your own AI in the back office as well. And I really think that we'll see a lot of first embedded AI, then we'll probably see a good bit of blended AI, which is how organizations are blending in things like APIs from foundational models with custom front ends, integrations, and the like to some of the other fundamental models that are already out there, so that you can start to take advantage of them without knowing a ton about AI, and maybe not taking on the risk that bring your own AI brings. Within F&A, we're seeing a lot of specialized AI applications, AI solutions for complex regulatory compliance, specialized solutions for like industry-specific financial analysis and the like. And these are, generally speaking, a form of blended AI, taking some fundamental or foundational models and then blending them. Why are we getting this change that we talked about? And I usually spend a long time on this slide, but I fear I'm going to run out of time if I spend too long. But Moore's law essentially said, technology processing power through semiconductors doubles every 2 years without a commensurate increase in price. And that's held true for like 60 years now. What's amazing is the rate of change in AI is so much faster. We're seeing the rate of change at a doubling of capability in AI every 3.5 months. So if that holds true in a 4-year period of time, you're going to see 10x capability. Or instead of 10x like you might see in processing power, you're going to see 10,000x explosion in AI capability over the course of, say, a 4-year period of time. It's hard to see on this curve. Let me blow this out to a logarithmic curve so you can see the delta between the old Moore's law and what we're actually experiencing now in AI. It's amazing. This just powering these engines and developing and testing these engines is the amount of work that's going into this is staggering. You see companies like Google, Meta, Microsoft. They're doing deals with electric utilities and nuclear power providers to help ensure that they can power their server farms and data centers so that they can support your AI needs of the future. It's a fascinating world, and I'm kind of sad that I'm toward the end of my career here, because I can't imagine what the next 10 years or so are going to bring. Hopefully I'm around for a few more years, but I doubt I'm in this industry for 10 more. So some questions we ought to ask ourselves. It's not whether you're going to be using some of these technologies. You are. It's how do I ensure that my investments are going to produce the desired results? Where do I place my prudent financial bets? How do I get ready? How do I ensure that I've laid a proper foundation for the use of these kinds of tools. I think asking these kinds of questions is really critical to our overall success. Technology enables transformation for sure, but reimagined processes are essential to realizing the full promises of a lot of these technologies. We're going to talk a little bit about the data needs that these tools have as well. Some of the more profound transformations really start with end-to-end process redesign. That comes from brute force mapping of processes, looking at triggering events, eliminating non-value added activity. I'm gonna jump forward because I'm a little worried about time, but a thing I want to say is you don't achieve true transformation by paving the old cow paths. You really need to think through the map to where you want to get completely different than what got you here to begin with, in my opinion. So how do we set the stage for taking use of these technologies? First of all, I'm going to quote an old college professor of mine, Peter Drucker. I had the pleasure of studying under him years ago. An organization must be organized for constant change. The coming years are going to be full of constant change, folks, and we have to make sure that we adapt and adopt to these. What are the ways that we can do that? We're starting to introduce things like Agile into our approaches. This is something that we stole from our friends in IT, adopting sprint-based approaches to the financial close, for example, with daily stand-ups, visual dashboards, staffing allocation and reallocation, continuous improvement cycles, and the like. These are things that we learned from folks in the IT world that we're now adopting in finance and accounting. Process standardization is going to be key again. I recently read a production company, relatively small one, said that they redesigned their royalty management process by standardizing contract templates to ensure consistent data capture, to implement a central rights management database, to use RPA to do a bunch of their royalty calculations, and then to do exception-based reviews as a result of this. They again, that had I think they reduced processing time by 60% and ended up with 90% fewer payment disputes by reorganizing that process and taking advantage of some of these technologies. It's going to require different people and a different way of thinking and a different way of leading. The skills required in finance are evolving dramatically. Beyond technical accounting knowledge, today's finance professional needs data analytics capabilities. You're going to need technology aptitude. You're going to need to understand process improvement. You're going to have strong business acumen in general. A recent survey that I saw found that like 78% of CFOs in media and entertainment cite skills gaps as their biggest transformation challenge. So I'm telling you, folks, these problem solvers that we need to parachute into our organization are people like data scientists who are focused on predictive modeling. You're going to need automation architects who can help you out with intelligent automation design and solutioning. Transformation specialists who can lead continuous improvement efforts and understand how to work people through change. And then business analytics partners, people that can translate data and turn it into financial insights for the operational leaders within the organization. I'd go on farther, but I think I should probably skip. But let's just again think through different ways that we're going to have to work in order to achieve these. Some of those are going to be looking at more collaboration, having some core in-office days for, say, collaboration activities, increasing the number of digital collaboration tools we have, structuring knowledge to prevent, or using structured knowledge and structured knowledge sharing to prevent breakdowns and information silos. We're surrounded by data. What we need to make sure is that the data is accessible for us. Your organization's operating model might need to shift as well. You might want to look at, as I talked about in my last session with MFM, shared service centers or centers of excellence, or embedded business partner teams within your business model to help the units to provide strategic support. Doing this allows, on one hand, some degree of specialization that I think is appropriate. I think also the discipline of moving to one of these models forces that standardization that's so critical for adopting these technologies. It also forces you to look at your data and the way your data is stored and accessed so that you can ultimately, again, take advantage of some of these tools. I'd be remiss if I didn't talk about data governance, right? I mean, without consistent, clean data, your AI investments just won't pay off. Data governance has become critical as a foundation for finance transformation. Without clean, consistent data, these technologies will struggle to deliver value. And even worse, bad data could lead to poor decisions, biased decisions, erroneous conclusions, and destroyed value of your overall organization. So we need to be careful about the data that we're relying upon. Successful finance teams establish clear data ownership. They institute quality standards and remediation processes. Many organizations have created finance data councils with representation from each functional area, especially within finance and accounting, but others as well, to ensure that they have consistent data definitions across all their systems, including their financial systems. In addition to testing, in-platform AI extensions in your existing tech stack, I think you're at the right time to be in, again, to think through how you're going to bring your own AI, if you will. Where is your organization and its overall readiness to adopt AI? And I'll take a couple of minutes to talk a little bit about that. High quality data, as we talked about, is foundational. Errors in training data propagate through AI systems. They lead to flawed outputs. Incorrect customer data can skew your predictive analytics, causing bad decisions, of course. Missing data points can prevent the models from actually identifying critical patterns. And then obviously bias. We've probably all read about bias in AI. One healthcare organization said that they had used an incomplete data set. They didn't have all patients' complete medical history in there, and their models were actually all wrong because they didn't include medical history prior to them joining their healthcare group, for example. Talk about data readiness for a second. Ask yourself these questions. Is your data centralized and accessible? To aid ingestion, store your data in unified platforms like data lakes rather than housing it in siloed systems. That centralization, again, improves discoverability, reduces integration challenges, and the like. Verify and document your metadata to make sure that your AI models have proper context for your data. Make sure that your data is inclusive, even of outliers and edge cases. I'm used to one of those, in old school, we deleted outliers from our analysis. Now we need to make sure that we include them as long as they're accurate so that we have a representative set of data to do our scenario analysis and the like. Again, I talked about establishing quality metrics. Cross-check your data against trusted sources. Use rules-based validation to check your data. Measure how many missing values are in your data sets and in critical fields and determine what's the impact of that. How are you going to deal with that? Make sure that you've properly assessed. How frequently is your data updated? Is it updated extremely frequently? If you're doing supply chain analysis, for example, you're going to want to have real-time data, not historical data that may be outdated by the time you actually go to make decisions. And then obviously data governance and the like. There are things like, again, you're going to want frameworks, and I'll talk about this in a moment. GDPR, you're going to want to have retention policies over your data. When are you going to archive outdated data that may no longer be relevant or may introduce problems into your models? Are you going to do automated checks? Can you do sampling as opposed to looking at the universe of the information that's available to you? And will that sampling inadvertently introduce problems should you ingest all the information? And does your infrastructure capacity actually support the volumes of data that you're collecting and the computational needs that you're going to have for the AI that you're contemplating building? If you can't answer these questions or don't know how to properly evaluate the answers to these questions, you should probably get some outside help in conducting, say, a readiness assessment to build a roadmap for you of steps that you need to take before you embark on a full-fledged AI journey. The folks in our risk assurance group would certainly want me to talk briefly about trustworthy AI. It's critical to relevance and accuracy. Is your data explainable? Is it fair? Is it transparent? How robust is the data and the systems that surround your data? Are these systems able to withstand attacks? Because they will be under attack. Can you keep people from stealing the data or poisoning the data, introducing bad data into your models that throw your models completely off track? And how do you protect people's data that goes into these systems and the like? I provide this again because my folks in risk assurance would want me to make sure that we talked a little bit about audit tools and frameworks. I list these up here. I'll just say a couple of quick words because I don't think time's going to allow for questions if I don't stop soon. There are some voluntary frameworks here. There are also things like the EU's AI Act, which is like the first comprehensive AI regulation globally. It's risk tiered. High risk systems face greater compliance scrutiny, of course, and greater audit requirements. But I mean, it's a real thing. And if you're working with European data, you need to make sure that you're complying with your use of AI in accordance with the standard here, or with the EU Act. I saw somebody just put up a question about polling question number 3, the question you've all been waiting for. And don't forget, you need to answer it.
Perfect. Thank you so much. Yes, polling question number 3 is now up on everyone's screen. So where do you see the nearest term opportunity for you to adopt AI in your F&A organization? And there are 4 answer options. And we'll just give it a few more seconds while everybody answers this question. And just a reminder, we did get another question. Everybody will receive a link to view the recording of this session along with a copy of the slide deck in tomorrow's post-webinar email. I'm going to go ahead and end the poll and share the results. Here we go.
Okay, fairly flat. The 2 choices in the middle got the most most votes, but I like the fact that we're looking across the board. It probably also talks about the disciplines that we all represent here. So I get this question a lot. How should I be using AI? CFOs ask me this all the time, other people within the finance organization. And while it may sound snarky, and I don't mean it to be, I usually say, well, what are you trying to get out of it? What do you need to achieve in order to do this? In order to use AI, what problem are you trying to solve? And I go back to Alice in Wonderland, and paraphrasing a little bit out of there. If you don't know where you're going, it doesn't really matter where you start. But if you have a clear plan of attack on where you want to head, then you can figure out what the logical first few steps are in adopting AI. We're almost at time, so I'm not going to pontificate a little bit further on this. I am going to, by the way, answer any questions that came up that I'm not able to get to through today's in today's 1-hour session. But I'm going to leave you with a few things that I think we're going to see in the next 5 years or so, and some I think we're going to see a lot sooner. I think right now we're living mostly in this first, on the leftmost side, tools that help us. They help us by enabling, they get us the data that we need. They help us ask questions of the data. They help us formulate the questions we should be asking of the data. They help us in crafting inferences about the data. They help us spot patterns that we might not be able to pick up on. Again, they're helpful. They're helping us as humans. I think one of the next steps that we're going to see are AI agents, digital workers that are taking on and acting on their own. Think of an AI agent as a smart digital assistant who doesn't just give answers, but it takes action on your part, just like a junior accountant might. It might log into a system, pull reports, make calculations, do follow-ups, even prepare you a summary for your review. An AI agent can be trained to do all that stuff today. Interestingly, however, AI agents that are truly able to act with intent, which I think are essentially upon us now, can start to understand the goals that you set, like reconcile these accounts, break down the steps that they can break down steps into a logical form. They can log in, they can pull data, they can compare balances, they can make decisions as they go along, they can ask for help if they get stuck. I think this is really different than traditional automation that's been really rules based. AI and agentic AI is more flexible. It's more proactive. We're talking about having agents that talk to other agents. This is really profoundly different. And I used to think that this was farther away. If you had asked me even a month ago, I would have said, "Oh, that's a couple of years out." But I was watching a TED talk with Eric Schmidt, the former CEO of Google, the other day, and he laid out a pretty compelling argument that the era of this exponential growth of AI and capability of these AI agents is really upon us. The question is how we're going to adopt them in the back office for F&A. 4 or 5 years out, maybe even sooner, if you listen to what Eric Schmidt said, these agents and systems will have the ability to access broad sets of unstructured data. They'll essentially have access to the universe of data within our ecosystems. I've been working with a platform called Palantir, and I don't know how familiar you are with it, but it abstracts a lot of the inner workings of getting the data into the system and figuring out what models would be best to model the data. And I think that's going to be just really fascinating, and it's not that far away, folks. So we really need to start thinking through today, what do we need to do tomorrow to take advantage of it? So in closing, I'll sum it up. Profession evolving rapidly. We need to adapt. We need to hire differently. We need to groom our people differently. We need to look for different kinds of people in our organizations. We need to get out of the way when necessary to let these digital natives help us. And then obviously we have to understand the technologies that we have available to us and chart a course for how we can adopt them within our organizations. And with that, I'll first apologize and say I'm sorry I ran long. As you can see, I added some additional content and I got a little passionate there, so I got off track. But I will open it up for questions if people have some.
We have gotten 3 through the chat box, so I'll go ahead and read
Okay.
those off real quick. What size of
Okay.
company do you mostly serve?
So my practice is actually a combination of things of different size companies. We do work with the Fortune 25. We do work with the Fortune 100. We certainly do business with smaller companies. I think how I help depends on how big a company is and what kinds of resources they might have available to themselves internally versus what they're really looking for outside help for. So the nice thing is I can flex and bend to the types of organizations that they are.
That's great. How specifically is RPA used in accounts payable? And you may have answered this, but I wanted to double check.
Yeah. I mean, I think it's used pretty extensively from anything from as a workflow engine, as a inbox liaison to say, yes, this is an invoice. Oh, it's an invoice from one of our vendors. So therefore, I'm going to flow it through a system. Many RPA platforms have built-in OCR and AI in them now that can start to interpret the data, do the three-way match, route it to approvers and or decision makers, and even close it out. So RPA could be used pretty extensively with a very broad definition of RPA and include, intelligent, I'd say RPA.
Excellent. How do you protect the security of financial data with AI models?
Well, I mean, that's probably an hour seminar on its own, and I didn't volunteer, but we could talk about that at a later time. I mean, data protection is something that you've got to, well, the whole data question is not just about data protection. It's about, A, do I have the right data? And is my data complete? And can I make good decisions based on this data? And then secondly, what are the steps that I need to take in order to protect the data? And some of that involves our friends in cybersecurity and the like, protecting from threats. Some of it has to do with our internal data security. How do we protect personal information from being used by parties within the within the company? How do we set up guardrails so that the models don't ingest PII or healthcare information or other things that we're worried about, so that we can protect and take advantage of the ubiquity of this data, but in a way that makes sense and protects us, our customers, our vendors, our suppliers, and the population as a whole.
Excellent.
Not the
Well,
best
we
I can in a minute.
Well, we might take you up on the offer to do a session on that in the future.
Yeah,
We are right at time, so if anybody else has any other questions, feel free to email me directly at amy.burton@mediafinance.org. We'll get those to Andy, and we can send the answers out in tomorrow's post-webinar email. We did want to invite everyone to join us on our next two town hall webinars, which the first one will be on June 24th on AI engineering prompts, group learning activity of AI basics. And on June 25th, it will be on antitrust compliance, what the media credit executive needs to know. Registration's available on the MFM website under programs and events. And Andy, thank you so much for sharing your time and expertise with us today. We greatly appreciate it. It was a wonderful topic, and I know this will be watched by all those that were not able to attend today. And look forward to seeing you on a future webinar. Thank you, everyone,
thanks.
for attending, and we hope you have a wonderful rest of your day.